Welcome to this explainer. Today, we're diving headfirst into the high-stakes world of corporate tax compliance in Nigeria. Now, I know what you might be thinking. Tax compliance? Really? But stick with me here, because understanding the Nigerian tax system is about way more than just crunching numbers or filling out boring forms. It's actually the lifeblood of your business operations. We're going to uncover the strategic moves that literally separate thriving, successful enterprises from the ones that just sink under the weight of regulatory fines. So, picture this. What actually happens when your business comes face-to-face with the Federal Inland Revenue Service, the FIRES? Well, if you're just looking at the tax code as some dry, dusty rulebook, you are totally missing the bigger picture. Think of it more like an obstacle course. Yes, it's packed with bureaucratic hurdles, but successfully navigating them, that is your absolute key to unlocking major business growth and protecting your hard-earned revenue.
Okay, let's dive into this. Here is our roadmap for navigating a corporate taxpayer's life cycle. We'll start with registering and filing returns, then figure out how tax assessment procedures actually work. After that, we'll look at payments, penalties, and enforcement, clear up the big debate between tax avoidance and tax evasion, and finally, we'll wrap up with the ultimate prize, the tax clearance certificate.
All right, kicking things off with step 1, getting registered and filing those returns. These are the absolute first steps any new corporate taxpayer has to take to get into the system legally. And the first crucial number you need to burn into your brain is 6. Every single company must register for tax purposes with the FIRS within exactly 6 months of commencing business. This is the moment you secure your tax identification number, or TIN. And guys, your TIN is everything. Under the Finance Act, you've got to display it on all business transactions, any correspondence with government agencies, and you even need it just to open a corporate bank account. Without it, you are basically a ghost in the formal economy. Now, once you're officially registered, you have to file your returns. That means your audited financial statements and your tax computations. And the law is pretty strict about the timeline here. For an existing company, your deadline is 6 months after the end of your accounting year. But notice the leniency they give to brand new companies. A newly incorporated business actually has up to 18 months from its date of incorporation or 6 months after the end of its first accounting period to file. So it gives new ventures just a little bit of breathing room to get their house in order. Moving right along to phase 2. Let's look at how the FIRS actually determines what you owe.
So once those returns are filed, the IRS uses a few different procedures to calculate the bill. The gold standard here is the self-assessment. That's where you compute your own liability, you pay it, and you file. Easy enough, right? But the IRS has a whole toolbox of backup plans if things look a little off. If you fail to file or your numbers don't add up, they can hit you with a best of judgment assessment, basically what they think you owe. They can also assess you purely based on your turnover or use a back duty assessment to claw back taxes lost to fraud or neglect.
But here's where it gets kind of wild. The FIRS has something called a jeopardy or protective assessment. They can drop this on you immediately in emergency situations. Just imagine a company trying to quickly sell off its assets, facing a sudden liquidation, or even crazier, a taxpayer literally trying to skip town and escape abroad before paying their dues. The tax authority can jump in and raise a proactive assessment on the spot to ensure those taxes don't vanish. It really shows you the sheer power the FIRS holds when it comes to protecting government money. Okay, that brings us to the carrots and sticks of the system: payments, penalties, and enforcement. Once you get that assessment notice, the clock is ticking. You generally have a strict 30-day deadline to pay up. But get this, there is actually a financial reward for paying early. If you pay your tax 90 days before the due date, the FIRS will literally grant you a bonus. Medium-sized companies get a 2% bonus on the amount paid, and other companies get 1%. And that bonus acts as a credit against your future taxes. It's an absolutely fantastic incentive that rewards smart, proactive corporate planning. But if you choose to ignore that deadline, the stick is brutal. Late payments instantly trigger a 10% penalty per year on the unpaid tax, plus interest at the commercial bank lending rate. And it goes way beyond just numbers on a page. The FARS can legally distrain, which means seize your goods, your properties, even your land to sell them off and recover the tax. And incredibly, if you're a defaulting ship owner, the FARS can actually issue a certificate to the Nigerian Customs Service to deny you clearance. They will literally detain your ship at the port until you pay. So with all that heat on the line, let's talk about a fascinating gray area: tax avoidance versus tax evasion. What exactly separates a savvy capitalist from a straight-up criminal? Former Chief Justice Belgore actually established a really powerful precedent here. He said, and I quote, Tax is an obligation, not a duty. One is not a bad citizen if one can organize his business or trade in a legal manner to minimize his tax liability. He basically noted that being highly pragmatic with your money might not sit well with everyone morally, but it is absolutely not illegal. This proves that actively minimizing your tax burden, as long as you stay within the confines of the law, is totally expected.
Let's break that down clearly. Tax avoidance? That is completely legal. It's simply the act of exploiting existing loopholes in the tax laws to legally pay the absolute minimum required. There's zero criminal liability, and as we just heard, the courts support it. Tax evasion, on the flip side, is a direct violation of the law. We're talking outright fraud, deliberately hiding income, and pure deceit. Evasion brings intense IRS investigations, massive fines, and actual prison time. One is just strategic navigation, the other is a criminal act. Which brings us to the final stop on our journey, the tax clearance certificate.
If you navigate all these rules correctly, you reach the ultimate prize. The TCC is your golden ticket. It's the proof that your corporate tax affairs are perfectly in order for the preceding 3 years. It means you've paid your taxes, settled any fines, and the FERS has no outstanding beef with you. And the best part? The law actually mandates the FERS to issue the certificate within 2 weeks of your demand, assuming your record is totally clean.
And honestly, getting it is surprisingly straightforward now. You don't have to lug massive stacks of paperwork around anymore. You just register for your TIN and VAT, validate that TIN at your local FIRS office once, and then apply electronically right on the FIRS e-portal. Once they process and approve it, you get an email and can instantly download your approved TCC. So why is everyone so desperate to get their hands on this document? Well, just look at this list of transactions that legally require a TCC. You cannot get a government loan, you can't register a company car, you can't get a certificate of occupancy, apply for foreign exchange, or even bid on a government contract without it. The TCC is quite literally the VIP pass you need to survive, operate, and thrive in the Nigerian business landscape. So, as we wrap up this explainer, I want to leave you with something to really ponder. When you step back and look at the strict deadlines, those brutal enforcement penalties, and the absolute power of holding a tax clearance certificate, how are you going to approach your obligations? Is your corporate tax strategy just going to be another frustrating compliance burden you complain about? Or will you use it strategically as your golden ticket to unlocking massive business growth in Nigeria? Think about it. The choice is entirely yours. Keep learning, keep planning, and I'll catch you next time.